Welcome to the Safety and Risk Success podcast with me, Christian Harris. Today I'm joined by Ben Cooney, who is a risk management professional I've known for a number of years, worked in some very high profile companies, and I wanted to get Ben on to talk a bit about risk. So how do we perceive risk? How do senior leadership teams perceive risk? How do we align risk, insurance and safety to get the best outcomes? What are some of the common misconceptions about insurers, and what can we do to work better with our risk and insurance colleagues to drive safer, happier, more profitable businesses, organizations, and better outcomes for us all? So a lot to cover in this episode. As always, if you've enjoyed it and you've got something from it, please do give us a like, a share, a comment, etc. on social media, and subscribe on your podcast platform of choice. Hope you enjoy this episode with myself and Ben Cooney. Cheers.
Welcome to the Safety and Risk Success podcast with Christian Harris. We believe that proactive safety and risk management powers business performance. Each week we explore this theme, sharing guests, stories, insights, trends, hints and tips. You can find us on all the major podcasting platforms, and video versions are available on YouTube. But for now, let's join the conversation with Christian.
Thanks for joining me today, Ben.
Pleasure.
This is your first ever podcast, you told me, so no pressure, but it better be good.
Okay, noted. I will promise to do my best, Christian.
Good. Well, I know you. I've known you for years, so I know you will definitely do your best. Looking forward to it. Let's start off with a bit of background. So, just tell us a bit about your kind of journey through the world of risk management and insurance, and kind of how you ended up where you are today.
I would say much like everyone, but probably a little bit more like everyone of my age. I fell into it. So I was working at a company called Into, which was a large shopping centre owner at the time. I joined them in 2008 on the financial transaction side, so sort of credit control, purchase ledger, etc.
Yeah.
And sort of got through after 4 years there, and wasn't sure what I wanted to do. And there was a secondment opportunity came up with our internal audit team. I thought, why not do that? And that was sort of summer of 2012. I had the pleasure there of working with Claire Coombs, who's since been the chair of AMIC as well.
Mm-hmm.
And she had recently picked up insurance under her remit, and it all sort of just came together there. And I stayed there for about another 8 years doing risk and insurance at Into.
Mm-hmm.
So it was never a conscious decision to move in. It was completely by fault, which is a little bit unlike people now. We get a lot more, especially see it with AMIC, where we've got the students that are coming in and people who want to make a profession in risk management, which is much nicer to see than people like me who fell into it.
It's very similar to safety, yeah. Mm.
And then from Into, I left there in the summer of 2020 and went to British American Tobacco. Again, I had the pleasure of working with another chair of AMIC, Angela Ionetta. At that point, and that was mainly through the pandemic. A lot of that, people can remember that far back. Working from home when it first came in, learning a new job in a global company was really exciting and very different in a way to what I'd been doing before.
Yeah.
But sort of adding to that experience and expertise. I then moved over to Brookfield, sort of private equity, right at the end of 2021. Again, a very sort of different type of organisation. So there it's all the portfolio companies. So rather than just looking after the corporate risk for one organisation, there's a lot more oversight across what was in the real estate group there, across Europe. So really sort of wide ranging. Everyone thinks of real estate as just real estate, but actually the different sectors and the types of companies make it a very rewarding and good variety.
Yeah.
And then where I am now is Avison Young. So I joined here back end of summer last year. A global property consultancy, so back in a global role, looking after the risk management and the insurance placement across sort of all of our sort of global portfolio, so predominantly US, Canada, and Europe.
Yeah.
And I think it sort of looks back at that and people think it's all the same, but I can assure you every company is very different, and the types of role are quite different when you come in.
Yeah, that makes sense. And give us a quick overview of AIRMIC, because you mentioned AIRMIC there for people that don't know what that is.
So AIRMIC is a fantastic it's a fantastic association. So for any risk or insurance manager working in commerce, it's a great way to learn, to network, to meet and understand what is going on in our industry, not just with your peers of other in-house risk and insurance managers or safety professionals, but also they've got great links in with insurers through sort of the UK, as well as the brokers. Yeah. So, I mean, I have found it in my sort of 13 years invaluable to get to meet and to know people through that association. It's really friendly. There's continuous events that are going on, webinars, seminars, conferences. And we actually had the conference last week that was up in Liverpool. I think there were over 2,000 people. Someone has to fact check that one sort of through the door. But I do remember Julia Graham, who leads the association, saying it was the largest conference they've had by far. And every year it just gets bigger, better. But like I say, great learning opportunities.
Yeah.
Throughout, whether you're senior or junior in your career through there. So big advocate.
Yeah, fantastic. Yeah, I've done a bit with them. I haven't been to the conference for a few years now, though. Perhaps I'll try and get back there next year. We shall see. We shall see.
Birmingham next year.
Birmingham. Okay, back to Birmingham. Yeah. Well, that's all. Well, they're all easy to get to, aren't they? So it's no problem about that. It's just juggling priorities is always the thing. And that moves us actually quite nicely into thinking about risk, doesn't it? Because juggling priorities and risk go quite hand in glove often. In your experience, Ben, how do senior leadership teams typically perceive risk? What do they think about risk? And then what would be some of the kind of blind spots that you've experienced or you've sort of heard about over the years from some senior leadership teams when it comes to risk?
It's a good question. I think it's definitely changed over time, or I've seen it change over time. I think the senior leadership teams now are much more aware of risk, and some of that is because of the information that's constantly out there for people, so they can always see what's gone wrong elsewhere, whether it's within your sector, industry, country, or just globally.
Yeah.
And with the speed of information that's going out and the reputational impact, I think risk plays higher up in their agenda, or feels higher up in people's agenda. Yeah. They don't want it to happen to them. Mm-hmm. So how they perceive it now is before may even be considered a necessary evil. But in today's world, I think there's a lot more. They want to have confidence that they've got the right individual or individuals or team below them that are understanding it, and that means that everyone is blending in the management of risk within their roles, the senior leadership, the middle management, and the front line. So
Yeah.
really embedding that throughout the organisations rather than just sitting on one person where it may have done before.
Mm. Yeah, that makes sense. I mean, the pace of change, but also the dissemination of information is something that is just unrecognizable now, isn't it, compared to even 10, 15 years ago with social media and things going viral. And I imagine, 30 years ago, um, many of the same risks still existed, but if something did go wrong, it would take months, for anything to get out into the public domain potentially, and therefore that reputational risk just wasn't anywhere near the top of the agenda like it would be now.
Yeah, I mean, crikey, data's been around for ages of people's names, addresses, crikey, probably back to checkbooks, if anyone remembers those that's listening to this. But no one sort of minded, we've lost a checkbook. We'll get another one. We can cancel that. And you're right, it would take days or a couple of days for things to work out. Now it's like, well, where's the card gone? Oh, I've got it. Everything is immediate.
Yeah.
Tweet on social media from the wrong person, and there's been so many instances of false alarms. But people don't always remember what was true and what was not, because it's then straight on to the next thing. And it's hard to get that reputation back. And if you lose 1, 2 customers, clients, or contracts, that could be the difference of being very profitable or breaking even, for example.
Yeah.
So or just losing that bit of market share or losing an opportunity to someone else because of something that's completely out of your control.
Yeah.
So I think it's a lot more there for senior leadership now, and I think it has to be for them.
Yeah, yeah. And what's your view on kind of the two sides of the coin? The positive aspect of risk and the sort of negative aspect of risk. How do you see people's perception of that has changed over time?
I think you've got to switch that a little bit and call it risk and opportunity.
Yeah.
And I think to take an opportunity, you sometimes have to reach. But if you're going to reach, you need to make sure you've got those guardrails. You've got to know how far you're willing to go, what your tolerances are. Are we going to keep throwing money at this? If so, how much? For how long? With what resource? With what and where are you going to draw the line for that?
Yeah.
And I think, again, a good risk function, we're not here to tell people what to do or what not to do. What we're here is to help them and enable them and collaborate with them and set some of those guardrails for people so that they can work towards what it is that they know best or better than we do, or within our organisation, to reach where they need to go and not fail.
Yeah. Yeah.
And I think that's the point of where we're trying to get to, is making sure that we can help with those tolerances. Whether it be with the financial team, whether it be with the health and safety team, whether it be with the marketing team. What is that catastrophic level that they want to avoid? Where do they want to take it?
Yeah. It's very, very important role then, sitting there and enabling and being pragmatic and balancing everything up, and very, very vital. business function, which hence having you on to chat about it. So it, if someone's listening to this and they're in the health and safety sort of function of the business, and they need to pitch for some investment into some kind of risk mitigation, risk reduction, risk improvement program, what would your advice be around how to sort of build a business case for that to resonate with the exec team?
One word I would always start with is value.
Yeah.
What is the value of doing this? I mean, what's the value of doing anything?
Yeah.
And when we sit in sort of the risk insurance safety side, that value is it going to save? Is it going to save a life? Is it going to save multiple lives? Is it potentially going to save money? Well, where is that money that it's potentially going to save? Over what period? And then where have these failures been before? And it could be that you've had near misses and you've been very lucky, and competitors or someone else has had that significant issue.
Yeah.
But when you pitch what the value is if we spend X here, the saving could be against all these things. Well, but then give that tangibility of what those things are, where they've happened, where it's happened, why it's happened, and why this is going to stop it. And I think senior leadership are a lot more receptive to some of these now, because if they've been aware that there has been a potential serious consequence and they've not necessarily acted upon it, and it's foreseeable, then that can cause further issues down the line. So they don't want these bad things to happen in their organisations either.
No.
So, I go back again. It's value and understanding that value. And when you're writing it, if you're writing it and it becomes a nice to have rather than a need to have, pitch it as a nice to have, or keep it for when you know that there's a bit of spare budget or something else that's there, rather than going every time of, I need this new toy, I need that new toy.
Yeah, that's good advice. So if we think about value, we need to, I guess, talk about the total cost of risk. Because as you say, where's the value coming from? Where are the savings coming from? Where's the profitability coming from? How are we going to build this business case? So beyond, I guess, insurance premiums, if we're thinking about how to calculate the total cost of risk, what are sort of the factors that we should be considering?
So, I mean, in a way, you almost want to leave insurance to one side, because insurance is that risk transfer. What you're trying to understand is, if any risk materialise, what is the outcome, or what are the potential outcomes for that? And it could be multiple outcomes. And it's time, expense, injury. And for each of those, you can then start to put a cost to them. And you can work out if there's, high frequency, low level, mid frequency, mid level, or very low frequency and a high level of those values. And I think looking at that total cost of risk is where these sort of percentages, or how likely some of these things are to happen. And then where is your tolerance? Not all organisations at all time can eliminate every risk. There are going to be some catastrophic risks will hit organisations in the coming 12 months. And you go, we could have insured or we could have transferred that, but the premium that you'd be paying to transfer it isn't sustainable. It's easy after the fact to look back and go, well, we should have covered that. And if we'd spent, millions, then we'd still be here. But in reality, you're not going to do that.
Yeah.
Got to understand where your tolerance is, where the expected losses could be, and where you want to retain them. How much of that you want to retain on your balance sheet, and then how much you want to transfer. And that's the play with insurance. What you're doing is you're just moving that financial risk from your balance sheet onto an insurer.
Yeah.
And you're paying them a premium to do that. I mean, alternatively, you can, put it into a captive, which is your own risk transfer vehicle. Essentially, it's just moving, that financial value from a balance sheet onto someone else's.
Mm.
And I think to get your total cost, you've really got to understand everything that goes around that, and what is insured, or what you have transferred, what you haven't transferred.
Yeah.
Easier to start with just looking at it all, and then realizing what's transferred afterwards. In my opinion.
Mm. Mm. And what about some of the kind of uninsurable uh, risks, like you mentioned, reputation risk? How do you start to make those a bit more tangible so you can try to quantify this total cost of risk?
So I think reputational damage can be tangible. So if you're looking at it, what are you going to lose from your reputation? Now, are you going to have a marketing campaign to get everything back? Well, there's a cost involved to that. Is it a loss of market share? So there's a cost to getting that market share back. What is that opportunity cost to come back? So within our organisations, we've got people, because they know how much it's cost to acquire these customers in the first place.
Yeah.
They know how much the lawyers are going to cost. They know how much this agency is going to cost. This consultancy is going to cost. You can actually start to make some of these slightly more tangible. And there are products, I believe, that are out there in the market that can provide you with some of these monetary values as well.
Mm.
Whether they're from parametric triggers of reputational indexes to, again, other solutions that you can speak with, brokers and insurers to find that are relevant, to individual organisations. So
Mm.
I think intangible and tangible are very separate, but I think intangible is starting to become something that you can at least quantify in certain areas more than we could before.
Yeah. Yeah. And if you can get all of this stuff right, what's the kind of big, as in, managing your risk well? What's the real value add? Is it financial? Is it sort of being able to sleep at night? Is it a combination of those and other things?
I think it's a combination, and it's having that. It's almost that smooth sailing across, so you're not having those shocks to the balance sheet. So you've got that cost certainty, even if it's just for the period of time before, maybe your transfer premium will go up the following year, and you'll have to look at what you're retaining, what you're retaining them, but you can go back. It can help keep the lights on, because you're not going to suffer that loss that could take all of the cash or everything out of an organisation. It can also stop accidents from happening because you've got good risk management. So you don't have any of the bad things that are there. You don't have to suffer dare I say, the death of someone from an accident that you're then thinking, if only we'd done that simple thing.
Mm.
And it's not just you, that's then the consequences that hit other leaders and management in there as well. So it really is a much more holistic view. If it's done right, it should be, dare I say, simple and easy. It shouldn't always have to be complicated. And you just don't get those shocks to the system.
Yeah. Have you got any examples, Ben, of projects or initiatives or things that you've been involved with over your career where you've kind of gone through that process of, we've identified this risk. Here's how we built the business case, and here's an example of an outcome that you could share.
Yeah, I mean, without mentioning any names, a number of years ago, we were an early adopter with my boss at the time, and she really was, of making sure we'd got into cyber insurance, for data as well, and we were trialing a number of things in that organisation, and one of them just so happened to be facial recognition,
right,
through CCTV, and we've been very all above board. We'd worked with the right powers that be to put everything in place. And then one day you get a letter that comes through from the I can say the Information Commissioner, I think it was at the time.
Right, yeah.
Saying that you shouldn't be doing all this. And we're sort of thinking, well, maybe we should have been. And then costs start to rack up. And for what was a very low level sort of cyber policy at the time, provided all of that cover. So all of the legal expenses of going through that were then immediately transferred over, and able to come back. It's going back to things like that. Everyone understands fire insurance, bit of business interruption insurance, and I think again the pandemic has really helped people understand what business interruption insurance, and how it can respond. But looking at some of these early adopters, and when we did have that cyber insurance, of understanding what we don't understand, and knowing that there can be some of that cover enables you to do things. And as long as you're transparent with insurers of what you're doing and how you're doing it, they're able to price accordingly, as well as being transparent with regulators. But if that shock does come in, the cost can go and just plateau all the way through.
Yeah.
I think the other one touching on of how it works well. I remember a fire, again, a number of years ago at a high-profile property. And it was on the news in the morning as I was sort of coming into work. And I had some training that morning, and I remember we sort of sent an email out to the insurers and brokers, and just in case you hadn't seen on the news, there's a fire there. And it was okay. What's you go in there? We're like, no. The team in place know exactly what they're doing. We don't need to be there. The fire brigade will point the hoses and put everything out. Our local operations team will clean up and will assess. And the last thing they need is more people in the way.
Yeah.
And I think that's the other bit, is understanding where you should be, right place, right time. Provide the support. Again, through the policies, you've got great services, whether it's the clean-up operators, the loss adjusters, and people wanting to get in there. The right experts know the exact time when they can add the value. They don't want to be standing around a cordon. They don't want to be getting under people's feet. They want to be getting in there. And I think you then have the recovery that's then, the asset was open the same day for trading still. Regardless of what had gone on, maybe a small bit of downtime, but that wasn't for anything that I did. It's probably more for what we didn't do, which is not get involved, not get under the feet of people, and let people do what they're supposed to do, and provide them that support that comes back from the policy, and again the cost afterwards to make things right.
Yeah. yeah, when it works well, it works well, doesn't it? And I think one of the challenges that I get or I hear from safety professionals is that they kind of feel a bit disconnected, or they don't really understand insurance very well, or they sort of, maybe have a perception that, insurance companies just going to pay out for anything, or sometimes they won't pay out for anything, and it's very, very, very varied um, stories that I hear. So I suppose be interested to think about, what could a safety person do to sort of bring themselves and the risk team and the insurer and the broker sort of together? What could they be doing more proactively to sort of make that kind of partnership work better, I suppose, in your experience?
Well, again, I think I must have been very lucky because I look back at my time at, both here at AY, I've got a fantastic, safety person in Maris. Back at Brookfield, again, great safety people there. BAT, again, I've always had good relationships.
Yeah.
I think a lot of that is communication,
Hmm.
just talking through what you're doing, what your priorities are, and making sure that they are aligned. And if they're not aligned, just talking through why they're not aligned and why, for me, on maybe the risk and insurance side, we're seeing something else across the industry, or we're seeing some claims or some incidents somewhere else.
Hmm.
So that's on me from our side to go. But again, from the safety people, tell me what it is you're seeing that I may not be aware of, because I can then flag it, and you can then have that wider relationship of bringing people in. Again, I'm not the expert. So if I've got a safety problem, and I want to talk to insurers, and we did this actually at our last renewal for Avis and Young, is I brought Marius, our safety person, in to talk with our liability insurers, because I don't want Marius to tell me, tell the broker to tell the insurer.
No.
We can all be in the same room.
Hmm.
And I'm very lucky. Marius can explain it a lot better and answer the question straight away from the insurer, rather than it going through that chain. And I think that is also powerful of us, for us in house, is bringing the right people to the table.
Yeah.
But yeah, just talk, communicate, catch up. Doesn't have to be formal catch ups. I don't think Maris and I have ever had a formal catch up, in the time we've been here. But I'd probably still say we speak very frequently, and not because we have a number or a high volume in any way of incidences or accidents. It's just it just works to communicate and know what's going on.
Yeah. Yeah. I'd certainly say, if you're listening to Ben and I, or watching us, and you're in that safety role, take that advice on board and kind of try and be proactive, and get involved in those conversations, because it'll be a huge benefit to you. You'll learn so much about how all this stuff works, but it'll be a huge benefit to the organisation as well. So yeah, definitely do get involved.
Yeah, echo that.
Yeah. I talked about a couple of misconceptions there, Ben, that maybe I've heard over the years. What are some of the biggest misconceptions that you've heard about insurers or brokers, and what can we do to sort of bust some of those myths?
I mean, we can start with insurers and the misconception that insurers never pay claims. Insurers always try to avoid paying claims. Insurers will always find a reason to deny paying a claim. Look, an insurance contract is something, well, it's possibly one of the most significant contracts that you enter into as an organisation. You've got to understand what it is you've actually bought, and what the triggers are that will trigger that contract. Don't assume that something is covered. Read it. Read the wording. Read the exclusions. Understand it before you tell everyone, "Oh yeah, we've got cover for fire." Great. Let's burn the place down. And then no, you're not covered for burning it down. It's fire. No, it's not. That's arson. Arson's excluded.
Yeah.
But it's probably not quite as bad as that. But people need to understand what it is in that contract that you've bought.
Yeah.
And the way to do that is probably the second misconception is brokers. Brokers are not a necessary evil. Having the right broker is essential. But to have the right broker, you need to know what it is you want the broker to do, to instruct the broker accordingly, make sure they're doing the right work, and make sure you've appointed the right person to do that. And again, if you just tell them to buy you a property policy, they'll just buy the property policy. If you tell them you need specific covers, they'll make sure that's in there.
Yeah.
If you tell them you're happy with some exclusions, that's fine. Read their reports. Listen to when they talk to you and explain it. Again, have that regular communication. Have that thought process with them as you're going through the year. What else are they seeing? What other claims are coming up? Would that have been covered under our policy? If you see something that happens, with a competitor within your industry, make sure you've got a feel and understanding of what that contract is actually doing that you've paid for. Don't just assume something's covered or it's not covered. And probably the last plug on that one is lawyers.
Yeah.
Go early, get advice. If you are unsure, there are some very good legal firms who work for policyholders out there. I won't mention any names, but if any of them are listening or apparently watching, if I'd known they were watching, I would have put a tie on and my makeup. But there are policyholder friendly lawyers out there. They just work for policyholders. They're not working for the insurer, so they're not conflicted.
Yeah.
They can give you the right advice early if you are, have any doubts on what your coverage is. Appoint them, get it, be armed, be ready, and negotiate and have that conversation. Again, one of my previous roles, a very large insurer, there was a BI dispute that they weren't willing to pay. By a review of that, picking up the phone, having a conversation with them, setting it out in clearer terms of why it was believed to be covered, turns them from saying no to yes. And as much as you like to say, "Oh yes, that's all on me," you need other parties that are going to come in there. You need to make sure you've spoken with those lawyers, you've spoken with the broker, that the contract's then understood, and then the insurer sees where you've come from and how it was purchased. I think those are some of the common misconceptions for me on those sort of three main points.
Yeah. I think a lot of the misconceptions probably come from people's personal experience with, a broken windscreen, or it's that kind of thing, isn't it? Or something happened in their excuse me, home insurance, and then because it's they're not going to have that support, they're not going to have that lawyer to call, etc., etc. Sometimes things happen and you haven't read the contract properly. So I think that a lot of those misconceptions come from personal experience, probably, rather than rather than commercial settings. Although it's always interesting to me how, I wouldn't say this happens in the health and safety world, but if you speak to, you know, people who are working in organizations, and the assumption about um, some kind of accident and a claim is that, oh, the insurance will cover us, and they have no idea about things like excesses and deductibles. And it's always a sort of like, oh wow, I didn't realize that we might not be covered for every single penny of every single cost. Is always quite interesting.
Amazes me when I talk to people. You go on the price comparison websites, and do you always go for the cheapest one? Of how many people say yes, or no, I don't go for the cheapest, I'll go for like the second cheapest one. And like, why? Well, the cheapest isn't always the best. And you sort of just go, okay. You just want to nod, and you've got to read along and
Yeah,
understand what it goes back. What is it covering, and is that what you need? And I think as we've got, people coming in now who are much more specialist in sort of risk, and that's been their career choice rather than people like me who've fallen into it. We are getting stronger relationships with brokers and insurers because
yeah,
people are understanding it. It's not just an add-on to someone's job, whether they be in, finance, administration, or some other department of, oh, and you're doing the insurance. We're getting more people into the industry who are understanding it's risk transfer
yeah.
of that risk and that part of it, rather than just anyone can do that. Just go on, the website or speak to them and get it. So hopefully we'll hear less of the horror stories going forward as we get much more professional across our industry.
Yeah, yeah, no, definitely, yeah. So we've spoken there about, obviously, price, premium price, and checking sure that the cover is what you think it should be and want it to be. What are the other things that people should be considering when it comes to, looking at potentially changing their insurer? What other sort of factors are there? Thinking about things like, any added value that insurers might bring, as an example.
If you're changing anything, the first question to ask yourself is, why am I changing? What's the driver for change?
Yeah,
And you've got to understand what it is you're looking for. If it's just price, anyone can do price. You can bring price down of the premium, but to bring that price down, you may just have higher excess or deductibles, you may have lower limits, and you may have more exclusions.
yeah,
So your current insurer may well be able to do that for you. You can speak to your broker and understand, what other people are buying. So are you properly aligned? Are there other insurers within your sort of industry, or that are providing the policies that are providing wider coverage or better benefits that sit there? So without that understanding of the need for change, it's really hard for you to convey that then to the insurers or the brokers or whoever the partner is that you're looking, because you're not going to necessarily get what you want.
yeah,
And this is an industry where you're looking, from my point of view, is longevity.
mm-hmm.
These insurance companies, they've been around for a long time.
Yeah,
Big ones. And there's a reason for that. Now, the brokers, again, have generally been around for a number of years. There's a reason for that as well. You've got organizations that know what they're doing and how they're doing it. So you just need to find the right organization for you, for where you need to be.
yeah,
So you need to understand where you are.
mm-hmm.
So again, it's all back to you. And even within your organization, you may have different people that have got different motivations. You know, the finance team may want you to spend less. The CISO may want cover to be higher.
Yeah.
So then you've got to again work with the parties internally to understand where their tolerance is, because they've got the conflicting ones. So actually, it's explaining, well, you want more, you want to pay less, so you can't have more if it's going to come down. So are you happy to go down? But then you're not selling that argument. Maybe the CISO said, great, well, you can do that, bring it down. But then if something goes wrong, instead of being able to transfer that, I'm going to need to have that contingency there. So maybe the budget can go up a little bit from the finance team because they want that trade-off.
Yeah.
But that's not necessarily my call to make. What my call to make is to make sure we've got the right people in the right place making the right decisions.
Yeah.
And we're there to help enable them to do that by understanding what their tolerances are for us to then transfer it.
Yeah. Yeah. I know I'm thinking of two clients of ours who are both in the sort of facilities management space. And they have very different obviously I don't know every single line of every single word, within their contract, but one of them has a very low deductible for accidents, the type of accidents that I work in, and the other has a massively high deductible. And it's very interesting to see the discrepancy there, and think about what are the drivers for that and what are some of the decisions around that. And I mean, in an ideal world, would you think that for health and safety types of risks, that you would want to be very comfortable with what you're doing and all of your controls and so on and so forth, and therefore you would feel that you wouldn't need so much cover? Would that be a sort of ideal situation, or I guess there's a counter argument to that as well?
I mean, the counter argument, a lot of it goes back to the frequency.
Yeah.
And, if it is high frequency, low value, you're essentially just pound swapping with an insurer. Is that economically viable for you as your organisation to do some of that pound swapping? And if it is, great. That works. That works for you. Go ahead. If your organisation is set up in a different way, that actually you can manage the high frequency, low value in-house, you've got the right systems in place, you don't necessarily need to do that pound swapping. So this is what goes back to that risk tolerance of where you want to set it and what you've got in your organisation. And without knowing those two organisations, it's probably they've got very different central setups that have those different models that are there. And they both work. They probably both work well. It's no difference necessarily on their health and safety controls or processes or procedures. It's not one is better than the other. It's just how they're dealing and how they're willing to transfer some of those risks. And again, that comes back to having the right, risk managers and people in place who can help explain that to the senior leadership and to the boards, so that the right decisions can be made, to have their organisational effectiveness, really.
Yeah, makes sense. So before we start to wrap up, Ben, we wanted to talk a little bit about risk management bursaries. It's something that we've spoken about over the years, and I know you've got a view on it. So a risk management bursary, if you don't know, is basically a mechanism by which an insurer will allocate some of your premium, I suppose, into some funding for risk management activities. And I suppose the potential advantage of that is it might bring some insights and some added value and some expertise that you don't have in house. Potentially the downside, which you'll no doubt say, is why don't they just give us the money or give us the discount and we can manage that risk better? But what's your view and experience of this?
I've used them in the past, and they've been very effective because it's money that, dare I say, you have or we have within our sphere of influence that can be used to support initiatives and projects and get things moving.
Yeah.
And it can make us look like the good guys rather than, always costing something. So, in the right context, risk management bursaries are great.
Mm-hmm.
However, there's also quite a lot of downside. One is, do you actually have your risk management bursary controlled, or is it being controlled by the insurer or even the broker?
Yeah.
Is it going to work to add value, and it's that word value again, to the program, to either minimize or mitigate specific risks that could help long-term reduction in your total cost of risk?
Yeah. And
then the third bit is, if you pay £1 to an insurer for them to pay that £1 back to you, do you really think you're getting a full £1 back? Bear in mind there are tax, and then there's other frictional operational costs that go through that.
Yeah.
So do you need to pay the insurer that, or can you manage that bursary, yourself? And some of that goes back of, is the premium all being paid by your organisation? Is it, a premium that's being recharged out? Whether it be if you're running sort of property policies or to external people, you've got to start thinking of how that flow is going to move of money. And again, if it is being charged out and you're recovering all those premiums, how are you making sure that you are spreading or able to prove sort of, some sort of equity with that premium spend across all of the tenants? So you're not just spending it on yourself or some of the vanity projects. It is going back into, really is to reduce their premium and their costs as well. So, yes, they are good.
If used correctly.
If used correctly at the right time. If it's just a bursary that's going back to the broker for them to produce a report, then, maybe not so much, unless it's a report you really, really need and wouldn't have paid in any other way.
Yeah.
And make sure you spend it all.
Yeah.
If it's there, and spend it at the start of the policy year. Don't wait till a month, 10, 11, 12, because then you're not going to get the benefit and of whatever that mitigation is for the following year. And that's what this is trying to do: get things off the ground, get things moving for you as your organisation.
Yeah, definitely. Yeah, and the numbers of the numbers in pounds and in volume or bursaries that go unspent is quite staggering, actually, if you dig under the hood of it. So yeah, definitely, if you've got one, if you're not sure, ask. Go and speak to the equivalent of Ben in your organisation and ask if something's available, and come up with some ideas where you think it can add some value. And if there is some cash available, then try and find a good use to spend it.
Maybe I can throw that question back to you, Christian, and with risk management bursaries, for the services that you're able to provide, what tangible benefits have you seen from organisations being able to do those initial trials or that proof of concept?
Yeah. So I think, as you say, it does depend on what the scope is of the work. But I think where you can if you can build it into some kind of like pilot of something that perhaps the client, may not have been willing to give a go uh, with it, if you know what I mean. So, right, we've got this money, let's give this a go, and we can sort of scientifically track the benefits and the outcomes of it, and prove whether the concept's going to work or not. Then I think that is of value. Um, Going in and just sort of doing, we try and do that if we can. We've done other projects with insurers where it's more, let's go and visit some sites and do some reports and write some recommendations. And there is a value to that because you get a fresh perspective, but probably less value than if you can actually implement some real physical solutions and scientifically track whether that's working. So I think you're right that if it's available and you can come up with a good use for it, then that's great. But I think you've got to get the scoping of it right, in my experience.
It's good to hear it from your side as well, of almost replicating that same thing of someone can throw money and go, yeah, I can write this, I can do that, but it's not going to give you the repeat business, and it's not going to give, again, that's that word value for them. It's just, yeah, you spent your bursary, thank you.
Yeah, and sort of my business, we sort of have taken the decision that commercially we're kind of most aligned to where we add the most value, we think. So us going and doing surveys and reports and things like that is quite cheap because we there is a value to that, because actually if you haven't got that, then you can't necessarily move to the next stage. But actually where we sort of monetize our expertise and our ability to do stuff is where we believe we're actually physically adding the most value. And I think that's the kind of a good way to balance that off commercially, and therefore that sort of rings true with this whole question of bursaries as well.
Cool.
I do also think that sometimes within the insurers themselves, they have a different perspective that could be valuable. But I would say probably more often than that, it's about what partnerships have they got and the organisations that they work with and can bring in that can bring, as I said earlier, a fresh perspective and maybe allow you to look at a problem in a slightly different way, maybe with a bit of tech or some innovation or something like that. Because I'm a firm believer that you can't be an expert in everything. So whether it's you in a risk function, whether it's a health and safety person in that function, you've got to have very broad knowledge. And therefore, if your knowledge is a mile wide, it can only ever be an inch deep. And therefore, you can find people that have an inch wide and a mile deep knowledge, like I do in my sort of area. I don't know anything about manual handling or this or that or the other thing, but I know a lot about what I do. Then partnering up with the insurers and having their sort of networks of experts and suppliers and specialists to bring in, I think that there's a value there potentially. Going back to the question about swapping a pound for a pound, you could argue that actually some of that network that they could bring in is where they're adding some value as well.
I think, just again touching on that point, there's also a number of those services that are, I would say, free, but they are included in your policy.
Yeah.
So if you speak to the insurer, you don't need to use a risk management bursary.
No.
They've got, a number of resources that they can help and assist you with. I've had in the past, from IOSH courses, NEBOSH courses, to experts who can do, all these wonderful things, and to try and look at it. Insurers want to not have to pay claims because there's not been the incidents, which makes them more profitable.
Correct.
Rather than avoiding paying it, they just don't want it to happen. So, probably going back not just on the bursaries, but understanding what their wider scope of services is. That goes back probably to your previous question about when you're looking to change, is understand what it is you want. But, it's probably understanding what also everyone can offer. What's their added value and their benefits.
Yeah, definitely. Yeah, definitely. Mm-hmm. Great. Well, thanks so much, Ben. It's been really, really interesting. Before we go, give you the opportunity to plug anything you want to plug if you're doing any talks or webinars or anything like that. And where can people contact you if they want to follow up with a further conversation with you?
Best place, you can find me on LinkedIn. I think Ben Cooney. I look like this. I'm at Avison Young. I suppose a quick plug for Avison Young. It's a full service property consultancy. So if anyone has got any requirements there, again, get in touch and I can put you through to any one of our departments to help you with whatever it is you want. But no, Christian, thanks. Really good to talk today.
Thanks, Ben. Yeah, no, we really enjoyed it.
enjoyable.
Yeah, I think we covered a lot of ground, and I'm sure there'll be some great pieces of info there for the audience to take away. So yeah, appreciate it. Thank you.
Hope so. Thanks. Enjoy your day.
Cheers.
Thanks for joining us on the Safety and Risk Success podcast. If you've enjoyed this episode, please hit follow and do share on social media. Does anyone you know spring to mind as a great guest, even yourself? If so, please contact us on podcast@slipsafety.co.uk. See you next week for another episode.